In this video, I will be sharing with you a complete course on how to trade support and resistance strategy. Honestly speaking, if you can be able to master support and resistance, you'll be able to make money consistently in the forex market. Support and resistance is an area, it's not a line, it's an area on a price chart where there is either a buying or a selling pressure. So when price gets to a resistance level, sellers step in and push down the price. And when price gets to a support level, buyers step in and push the price up. So support and resistance level is very important in the forex market. So that is why you need to take out time to master support and resistance, because if you can be able to master support and resistance, you'll be able to trade the forex market profitably. The basic strategy in the market is to buy an asset when the price is at the support level and to sell an asset when the price is at the resistance level. It is important to know that support and resistance level are not exact points. Rather, they are levels. They are zone on a price chart. They are not exact line, right? So that is why you don't need to wait for price to touch your line before you can see it as a level. Rather, see it as an area on a price chart where price tend to reverse. So support and resistance helps. Rather, it is a zone where demand and supply can change. So when we talk of resistance level, when a price is in an uptrend and then reverse from an uptrend and start heading down, that point where the price reverse from is known as the resistance level. In other words, you can call it the peak. And when a market is in a downtrend and then reverse from the downtrend and start heading up, that point where the price reverse from is called a support level. In other words, you can call it the trough. So when a market or a chart moves, it always drop peaks and troughs. So these are the things that traders are always looking at. So in the market, we have three types of market. We have the uptrend, the downtrend, and the range. So it is not left for you to use your horizontal line, your trend line, to be able to identify areas on a price chart. So these areas tend to be support and resistance level. So for you to trade support and resistance level very well, you need a horizontal line, you need a trend line, you need a moving average, because a moving average can act as as a dynamic support and resistance level. So these are the three things you need: a horizontal line, a trend line, and a moving average. Right? That is what you need, the tools you need for you to trade this strategy profitably. So when we talk of support and resistance level, we have two types. We have the bounce and we have the breakout. So whenever price is respecting a particular level, we call it the bounce. That is why if a market is in an uptrend, it tends to receive support, right? And that point where price receives support is known as a bounce, because that is where price gets to and then get rejected. That's what we call it, the bounce. If the market is in a downtrend, the price tends to receive resistance level at the peaks, and that is where the price tends to bounce off from. That's what we call it, the bounce. Then we have the breakout. The breakout is when the market is in an uptrend, and then what happens is the price now reverse, make a pullback to the support level, and instead of the price to get rejected, that is to bounce off from the support level, the price break through the support level and start heading down. That is called the breakout. The same thing applicable to downtrend. When the market is in a downtrend, they makes a reversal or a retracement to the resistance level. Instead of the price to get rejected at the resistance level, that is to bounce off from the resistance level, the price now broke above the resistance level. That is what we known as a breakout. So whenever a breakout occurs, it tells us a change of trend. If the market is in an uptrend and then reverse and break below a support level, it means the market have changed from an uptrend to a downtrend. And if the market is in a downtrend, then reverse, made a retracement to the resistance level and broke above the resistance level, that means that the price have changed. That means that the market have changed from a downtrend to an uptrend. So these are the basic things you need to understand about support and resistance level. So now, before we start, let me show you an example of what I'm talking about. Now, if you look at this example, look at this price chart very well, you will see what we mean by support and resistance level. Another thing about support and resistance level is when a resistance level is broken, that resistance level automatically becomes a support level. And when a support level is broken, that support level automatically becomes what? A resistance level. Because whenever price breaks above a support level, it always come back to retest it before continue heading to its direction. And when a price breaks above a resistance level, it always come back to retest it before heading up. So that is why whenever price breaks above a resistance level, that resistance level automatically becomes a support level. And when price breaks below a support level, that support level automatically becomes a resistance level. So this is the example of what I'm talking about. So if you watch from this point, you can see that the market is in an uptrend. The market is going up from this point, right? The market is going up from this point. Then the market now got to this point and then got rejected, leaving what? A peak here. So this is what known as a resistance level, right? Leaving a peak here and then went down. So this now becomes what? A resistance level. So when the market rallied down, it gets rejected here, leaving a trough here. So this trough is what we mean by support level, and the market now went up again. So you now use your horizontal line. This red line is a horizontal line. Use the horizontal line to mark the peaks and the trough, that is the highs and the low, right? So now you have drawn your resistance level and you have drawn your support level. So what happens is this: each time price comes to this resistance level, you take a sell trade and your stop loss must be above the level. And each time price gets to this support level, you take your profit and then place a buy trade, and your stop loss must be below this support level, right? So this is what you will be doing, because in this point the market is ranging, and when the market is ranging, both the buyers and the sellers are in equilibrium. They are exchanging prices, right? So the sellers sell from the resistance level while the buyers buy from the support level, because there's an exchange of price. Buyers and sellers are in equilibrium, right? So that is why you sell from the resistance and you buy from the support until the market change condition, until either the buyer or the seller win. So if the price breaks above the resistance level, it means the buyers have defeated the sellers. So in this scenario, the price now broke above this resistance level. This signifies that the buyers have overtaken the sellers, so the market is going to go up. So what happened is this: the price rallied up and then came back to the same level and retested it. So automatically this resistance level became support level. Formerly it was a resistance level, and right now it have changed into a support level. So that is why I say when a price breaks above a resistance level, that resistance level automatically becomes a support level. The same thing applicable to the downtrend. When a price breaks below a support level, that support level automatically becomes a resistance level. So this is how you trade support and resistance level. Another example here is that you can also use the moving average as a dynamic support and resistance level. So in this process, you can clearly see that the 20 and the 50 exponential moving average is acting as a support level, because the market is clearly in an uptrend. So whenever the price makes a retracement to the moving average, it gets rejected. When price makes a retracement to the moving average, it gets rejected. You can clearly see it. So what you do is, whenever price makes a retracement to the moving average, the 20 EMA, or the middle of the 20 and the 50 EMA, we simply take a buy trade. And whenever price makes a retracement to the middle of the 20 and 50 EMA, you take a buy trade. Each time price makes a retracement to the middle of 20 and 50 EMA, you take a buy trade. So this becomes a zone. This middle becomes a zone where buyers are stepping in. So in this process, the moving average is holding onto the price because the market is clearly in an uptrend. So the market tends to receive support from the moving average. So you see the power of the moving average. So and in this scenario, you are expected to buy only. Don't ever sell because the market is rallying up. Buyers are in charge, so you are only expected to buy. And where do you buy? You buy at the support level, which is at this moving average line. So if the price rallied up, don't buy here. Wait for the price to make a pullback to this 20 EMA or the middle of this line so that I can take a buy trade. And each time price makes a pullback to the 20 EMA, you take a buy trade. So this is what you should be doing until there is a crossover that tells you that the price have changed direction. We also use a trend line as an area of value, right? So when the price is clearly in a downtrend, you can use a trend line to connect the highs, which is the peak, right? So you draw the trend line, connect the highs, right? So each time price comes to the trend line, it gets rejected. Each time price comes to the trend line, it gets rejected. So the trend line becomes an area of value. So what you should be doing is you watch for the price and wait. Each time the price makes a retracement to the trend line, you take a sell trade and your stop loss must be above the trend line. The same thing is applicable if the market is in an uptrend. You draw a trend line connecting the troughs, that is the support level, the bottom. You connect the lows, right? So each time price makes a retracement to the trend line, you take a buy trade. Each time price makes a retracement to the trend line, you take a buy trade. So this is how you trade the forex market using support and resistance level. So if you watch clearly, you see that the trend line is holding onto the price and acting as a resistance level in this scenario because the price is clearly in a downtrend. So now let me show you a live example of what I'm talking about. So this is a live example of what I'm talking about. This is clearly Euro USD 1 hour time frame. So right now you can see that the market was formerly in an uptrend. So when the market got to this high, the market began to range, right? So what you do is you identify support and resistance level so that you can know where to enter a trade. So you simply plot out your horizontal line. So you connect the highs, right? So this acts as a resistance level, and then you connect the lows. This now acts as a support level. So this is what I talk about, the change of demand and supply. Right now you can clearly see that before this was acting as a resistance level, right? You can see that each time price comes, it gets rejected, comes, it gets rejected. So this area was acting as what? As a resistance level until price broke above it. So when price finally broke above it, this resistance level automatically became a support level. So now the price is now respecting it as what? As an area of value. So formerly this level was a resistance level, now it has become a support level. So each time price comes to this level, you take a buy trade, right? Each time price comes to this level, you take a buy trade. Each time price comes to this level, you take a buy trade, and your stop loss must be below this line. Your stop loss must be below this line, right? So each time price comes to this level, you take a sell trade because this is acting as what? As a resistance level, because this is where the price got to and then get rejected. So each time price comes to this level, you take a sell trade. Each time price comes to this level, you take a sell trade until price breaks above it. So you can clearly see that right now price has broken above it, telling you that the buyers are still in charge of the market. So what happened? As price broke above it, the price now came back to retest this resistance level, which has now become a support level, right? So now we have a new support level here, right? So this level now is now acting as what? As a support level. So what you do is that each time price comes to this support level, you take what? A buy trade. So this is how you trade the forex market using support and resistance level. I hope you love this video. If you do, give us a thumbs up. Don't forget to subscribe to my channel for more educative content like this. And also, don't forget to turn on the notification icon to be the first to be notified whenever I publish new content. I will see you again in my next update. Don't forget to backtest this strategy on your demo account before using it live. See you again in my next update. Bye!